It's Larry also your housing market update for the last day of February. There was so much news this week and rates really moved a lot. This is actually what I said would happen last week, and it happened. So let's get into this because there's a lot of information to go over. Let's go to the big three: prices, housing, inventory. Prices up. We had a Case-Shiller home price index come out. Inventory is up as well. And then rates are down. Look at that, 3 green arrows to start this report. I'm super excited about that, and you should be as well. Let's look at the headline news. We got home prices continuing to rise, but we have home sales continuing to drop. Inflation holds steady. Actually, inflation went down just a little bit, in line with expectations. I want to talk to you today also about long-term home ownership and show you why long-term home ownership is such a great idea and positive for people's finances in the long run. And then we'll look at initial jobless claims real quick. They spiked this week. Get in this, break this down a little more. Let's talk about first the Case-Shiller home price index. This is the gold standard for home price appreciation across the country. And we hit an all-time high for a home price appreciation for the 19th month in a row. We are up 0.5% month over month, up 3.9% year over year. So those are very good numbers. And really, bottom line is home prices are continuing to appreciate and rise at about a 4% annual increase year over year. So that's a great return on investment, especially considering we are in a market that has not been very good with interest rates. All right, let's look at new home sales. I said home sales continue to slow. Well, signed contracts, this is for new home sales, dropped 10.5% in December. That was much lower than estimates. And we're at a 3-month low of 657 new contracts signed in the month of January. So those numbers not very good, especially considering the new home sales. The home builders typically have the best rates because they bought in bulk. But some of this is due to overall interest rates being higher and also cold weather across the country, in particular in the South. We had an increase in months of supply up from 8.5% to 9%. But despite the slowdown, prices, the median sales price of new home sales rose 7.5% to $446,000 in January. So you're seeing numbers continuing to rise as far as price goes, but the number of sales slowing down. Let's look at pending home sales. These are homes that are in contract. We saw a 4.6% decrease month over month. That's the second month in a row that we've seen a decrease. The overall index is down as well. Sales are down 5.2% year over year. And that number, the number of pending home sales, is at the lowest level that we have seen since we started tracking. The National Association of Realtors started tracking this number back in 2001. Again, this just goes to a market where people are, they're afraid of high rates. They're afraid of what the economy is doing. They're afraid they're going to lose their job. Hence, they're staying put. They're not buying a new home. They're not selling a home. Pending home sales are down. Now let's look at the inflation. The personal consumption expenditure report, which came out this morning, Friday morning, the 28th, the last day, and inflation dropped, but that was as expected. All right. Remember, before COVID, we were at 2%. All right. And we went all the way up, at 6.6% for core inflation. But this last month, the core dropped from 2.8% down to 2.6%. That is near the lowest rate we have seen in 4 years. So that's great news. Incomes were up, but here's some of the other news that came out in the PCE. Incomes were up 0.9%. That's hotter than expected. Savings were also up from 3.5% to 4.5%. So I believe those numbers might be skewed a little bit because the people who are saving are the people who have a lot of money, but the people who are struggling, they're not saving anything because they're living paycheck to paycheck. How do we know that? Well, 60-day delinquencies, 60-day plus delinquencies were up 7% last month and have hit the highest on record for auto delinquencies. And we're at $1.2 trillion in consumer credit card debt. Those who are making the minimum payment, all right, also at an all-time high. So the people who have money aren't struggling, but the people who are just barely making it work, they are struggling with making their payments. First, it starts with credit card, maxing them out. Then they start getting late on their auto payments, and then guess what happens? They start getting late on their mortgage payment. Nobody wants to do that. We could see that if we see inflation continue to stay at the level it's at. We still need it to come down, and because of that, we don't expect necessarily the Fed to drop the Fed funds rate. We need inflation to come down just a little more. And here's the other issue. Inflation going forward may not drop. It may actually go up due to a lot of different things. We're talking inflation may go up. We have tariffs, so we may see the price of energy go up. We might see the price of goods and services go up due to these tariffs taking effect. Contrast that, though, we might also see employment continue to go up. Employment continues to go up, and we'll see this next week. Well, that shows a slowing economy. We have a slowing economy. We might actually see interest rates drop. We might see the Fed begin to lower the Fed funds rate. So a lot of things working against each other right now, but overall, economy slowing down, spending slowing down, home sales slowing down, interest rates also coming down. We'll get in that in just a second. Before we do that, though, I want to show you how long-term home ownership really pays off. Over the course of really since 1942, in only 1 year, home values actually dropped since 1942, and that was in 2006. That was right at the beginning of the housing market crash when home prices were at the max amount, and then they dropped over the next 10 years, and then you see you have a -3. But even then, that was one number since 1942. You look at the last several years, you've seen those numbers go up, even over 100% appreciation over 10 years. So that just goes to show you that home ownership is very good in the long term. In the short term, though, man, it's risky. 2 to 3 years. You want to own the home 2 to 3 years, preferably longer. The longer, the better. You allow time to work in your favor. But overall, long term, owning a home pays off. 10 years or more. You know, again, I'm a person who has seen that. I bought a home in 2005, and I sold it in 10 years. Actually, it didn't really go up for me. But overall, I ended up making money on the sale, but that's because I had a lot of equity in the home, but the home didn't appreciate. So just know home value, long-term home ownership is good. Short-term is very, very risky. Anybody who's bought a home in the last 2.5 years knows that, especially if they're trying to sell their home now. Let's look at initial jobless claims. So initial jobless claims spiked 22,000 to 242,000. You can see on the chart, you see that one little spike. Continuing claims, though, were down 5,000. But still overall very high at 1.862 million. The initial claims were the highest since December. So that's actually not a surprise considering all the talk and all the firings and layoffs that are going on. I'm not just talking federal government. You're talking Google just announced layoffs. So there are a lot of companies that are going to tighten their belt, and we'll see how those 20,000 or so federal workers who were laid off or terminated. They're not showing yet. We probably won't see those numbers start to show until March, April timeframe as we go through the perturbations of really the layoffs, the mass federal layoffs that we're seeing. Let's take a look at VA rates. This is a good graph right here, all right? Told you last week, if we got good inflation numbers, rates would come down below the 6.25, and guess what? Inflation's lower, consumer confidence was lower, and what did you see? You saw rates drop from 6.35% at the beginning of the week down to around 6.17. Those are great numbers. Now the question is, what's going to happen next week during jobs week? We don't know. All right, and jobs week typically comes up as a surprise, but if we see jobs decrease, the number of new jobs decrease, if we see unemployment go up, we could get below a 6%, all right, on average. And guess what happens if VA rates get below 6%? All right, we're going to get into that in just a second, but I guarantee you, you're going to like what's going to happen, all right, unless everybody comes back in the market. But for many people, this is going to be good news if rates get below 6%. So what does this mean? Buyers, mortgage apps were flat last week. Refinances were down 6%. I expect that to turn around. I've talked to all my clients who are looking to refinance, and we are really close to being able to refinance a lot of them. Last time rates got this low, and this was back in September 2024, buyer refinance activity jacked up. It went up big time. Expect that to happen. Jobs week next week, we could see rates drop even more, as I said previously. But if the unemployment number stays the same or goes down, then we'll see rates go back up to around the 6.5%. But right now, everything's looking good, and the expectation really is that we will see rates continue to go down next week. Here's the thing though, if you're waiting for rates to go down before you get back in the market, then you're going to miss out. And remember, right now we're in a buyer's market on the leeward side of the island. But as you see more people come into the market, and you're going to see that with rates go down and PCS season coming up, end of the school year coming up, you're going to see more people come in the market. Those seller credits are going to go away. Home prices are going to start going up, and you're already seeing that, folks, in Kailua and Mililani. I have clients who are looking there right now, and they're getting beat out. People are going over asking price in Kailua, Kaneohe, and Mililani, just because there's such a lack of inventory, and those areas are so desirable for people to live in. So Leeward, not that people don't want to live in Leeward, but there's more inventory, there's more options there, not so on the windward side and in Mililani. Sellers, I would still hold off. All right, I don't think I would put my house on the market till April. And if rates are low, boom, you're going to get an instant hit. All right, you don't want to be selling your home with 30 days on the market. You want to put it on the market and boom, have it sold right at the day you put that sign in the ground. All right, that's all I got for you guys this week. Again, any questions you have, please don't hesitate to reach out. Please like, comment, subscribe, and hey, be on the lookout. I have a lot of good seminars, webinars, workshops coming up to help make homeowners successful and educate first-time home buyers and veterans on the value of buying a home and the risk. I always talk about the risk, all right, but the value and long-term, as I talked about earlier, is in home ownership. All right, have a great week. Have an awesome March. Aloha.